Okay. All right. Good evening, everyone. Thank you for joining us for the webinar tonight. My Last Delivery, What You Need to Know About Disability Insurance with Dr. Stephanie Pearson. I'll give a minute to let everyone log on and join. In the meantime, I wanted to introduce myself. I'm Rainey McNeely. I'm the Physician Engagement Specialist here at Practice Match. If you attend any of our live fairs or you uh, submit your CV for review, that all comes from me. Um, I wanted to remind everyone that tonight our microphones are muted. If you have any questions, please feel free to put them in the Q&A chat box, and Dr. Pearson will answer them at the end of the webinar. Um, Again, the webinar is being recorded. A link will be sent to you at the end of the week, and it'll also be posted on our website. Again, if you have any questions, please put them in the Q&A chat box. We can wait just a minute if you'd like, or Dr. Stephanie, you can go ahead and take over.
Hi, thank you guys for joining me this evening. Hopefully some of you are here that I saw at Practice Match in New York previously. So hi and welcome. So I am going to share my screen and then it's actually telling me that I'm sharing, but I'm not. So let's try that again. Right. Rainey, are you just seeing my one slide?
Yes, ma'am.
All right. So I'm not sure how many of you watching are OBGYNs, but you should hopefully remember enough of your third year rotation to realize that a slide like this is a little bit concerning, or I should say a strip like this is a little bit concerning. Actually, it's not the real slot. It is not the real strip. Words are hard this evening. I got called to do a precipitous delivery. I walked in the room. It was actually one of my favorite patients. I had delivered 3 of her kids. This was baby number 4. It should have just fallen out. I should have been able to just stand back, catch, and leave. Unfortunately, because she got there complete, she couldn't get an epidural. I couldn't get her to sit still to get a pudendal. She was kind of climbing up the bed. So I had 6 nurses in the room trying to help me and help get her in a position so we could have a safe delivery. And admittedly, I've been known to raise my voice before to tell women that they could go ahead and have their baby and I would fix after because, well, I know how to put stuff back together. But I looked down and the baby's heart rate was in the 40s, but the head was right there. So I grabbed a vacuum, placed it on the baby's head, and as I was guiding the baby out, I actually got kicked 2 times. The first time was as I was guiding the head out. The first kick came to my brachial plexus. My arm went numb. I thought I was doing myself a favor by shifting my body. And when I got the widest part of the baby's abdomen out, the second kick came across my shoulder. She also dropped 2 of my nurses against the wall that was against the bed. And unbeknownst to all of us, 3 careers were ruined. I knew something was wrong, but I was able to finish the delivery. I put baby on mommy's chest. I walked out, called down one of my partners to finish the delivery, and I knew that something was really wrong. Eventually, I was diagnosed with a torn labrum, although my first treating orthopedist told me that professional baseball pitchers pitched with torn labrums, so I should be able to do my job. And I was having increasing range of motion difficulties and pain. And admittedly, I felt like I was being a little bit waved off. And about 8 months went by, and I tried my hardest to compensate and to be able to do my job. And I eventually got called in to do a C-section on a midwife patient who had been pushing for 5 hours. And when I walked in, I didn't recognize my first assist. And it was because it was his first section at our hospital. And I just could not get my left arm to do what I needed it to do. I started crying. I called for one of my partner's stat. And again, able to finish the delivery. Everything was fine, except I knew that if it had been 2 in the morning instead of 2 in the afternoon, I would have had to make this young woman an obstetric invalid. I've never been beaten by a baby, but I would have had to tee up her uterus, and that would have been my fault, not Mother Nature's, right? Mother Nature wins a lot. But this truly would have been my fault because I didn't have the dexterity to do what I needed to do. And I got diagnosed with a textbook frozen shoulder, but was told, and this is a new doctor, no worries, we'll operate. I'll have you back in 12 weeks. My surgery didn't go as well as planned. I still have considerable range of motion deficits and nerve damage in my left arm. I was never cleared to do OB or operate, and I was actually unceremoniously terminated the day that my FMLA was up. This is not a contract talk, but my contract in fine print said that I needed to be able to do 100% of my job duties, and I couldn't. And so they had every right to let me go. It was incredibly frustrating. We had been talking about me becoming the chairperson of our department. I was one of their highest earning OBGYNs, and I basically just got tossed. So please, when you become an attending, take the time to have somebody look over your contract. It is worth a couple $100 for your peace of mind. I then found out that a lot of the things that I thought I did the right way when it came to insurance, I didn't. I found out that the group policy that we had at our hospital in fine print didn't cover work related injuries. I was told I would have been better off had I fallen off my bike. So I was flatly declined. Then I was like, okay, well, if I'm getting declined by them, then workman's comp should pay me. It was an injury at work. Well, guess what? I was denied initially by them. They said that while an injury occurred, my frozen shoulder was idiopathic or my fault because I kept working. And I'll talk a little bit about workman's comp, not too much, but we'll get there. So I became incredibly passionate about the topic of disability insurance. And I did have a private policy, but I didn't have what I should have had. And so I threw myself into learning everything I could about this topic. I wasn't taught as a resident. I bought my first policy as a first year attending, and it just didn't have what it should have had. And it was because I didn't know what I didn't know. So, really, this is the only time I'll talk about workman's comp because it does vary by state. In 2013, Pennsylvania did not recognize a six-figure income. It maxed out at $3,500 a month, and I was making more than that a week. I did end up settling after a little over a year because during one of my court appearances, a vocational specialist said that I had the aptitude to learn codes so I could be a billing secretary. Now, I have the utmost respect for all of our ancillary help that we get. We cannot doctor by ourselves, but I would venture to say that all of you watching are not putting yourselves through med school, residency, etc., to be a secretary. And so I was not in a good mental headspace, and I just needed to get on with my life. So we're talking about disability insurance. So, high level view, disability insurance is income replacement protection. So, it is what allows you to continue to earn income if, because of injury or illness, you cannot do your job. When we look at it from really a 10,000-foot look, there are certain things that are almost universal, and then there are things that are particular to one individual. So when we talk high level, disability insurance comes in two major flavors. You have group benefits and you have private benefits. Group benefits also come in two flavors. You have employer benefits and association benefits. I don't spend a lot of time on association benefits. The AMA, the American Academy of Fill in the Blank, those policies are being blessed because somebody's paying to have them be blessed, not because they're actually in our best interest. I will put a little asterisk. They may be the best option for some people, right? Just like in medicine, not a one size fits all. And what's important to one person may not be so important to their neighbor. When we talk about employer benefits, they come in two major flavors and then some. The overwhelming majority are employer paid. It's part of your benefits packet. You check a box and you move on. Sometimes they're voluntary. So your employer will say, hey, we have it, but if you want it, you have to pay for it. And we're seeing a lot of what I say in between, where a hospital system or an employer will have what's called a base benefit and then a buy up benefit. I typically don't recommend buying up because you're buying up into an inferior policy. And there are three main areas that we see group benefits paling in comparison to private benefits. And it has to do with taxation, ownership, and language. Taxation. A lot of people do not realize that if your employer pays for your policy, any money that you get from that benefit is going to be considered taxable income. With a voluntary group long-term plan or an individual private disability plan, you're paying with post-tax dollars, so any money that you would get would be tax-free. Big difference between money that's getting taxed and money that's not getting taxed. Ownership. It actually doesn't matter with an employer policy if it's employer paid or employee paid. Your employer owns the policy. That means they've created it, they control it, and more often than not, they keep it. They tend to be employment dependent. So if you decide to leave one job to go to another one, you're not taking that with you. Again, just like in medicine, there are exceptions to every rule. Some of the carriers will allow you what's called a conversion option, but even when you convert, the language and the pieces of the puzzle aren't necessarily the same. With a private policy, you own it. You should help create it, you should control it, and you get to keep it. It's like having it in your back pocket. The word that gets thrown around a lot is portable. It's going to go with you wherever you go in the United States as long as you're practicing. The single most important thing that I say, and this is the most important slide in the whole deck, is that there is an issue with language and terminology. There is no standardization of language in the insurance space. So companies can use the same phrases and define them differently. They can use different phrases and define them similarly. And even if a carrier has both a group product and a private product, they don't necessarily have to match. So it's not surprising that oftentimes we're confused. And if you're not used to looking at these documents, you may not totally understand what's there. And it's really important that as you're looking into this product, that you're speaking with somebody who's going to take the time to go through all of those definitions. So what exactly does a group benefit cover? So it's interesting. Many times folks will assume that there is a certain percentage of their income that's covered. Well, that's not completely untrue, but oftentimes, especially if you're in an academic setting, it's going to cover the base salary, not your total income. There's often a maximum benefit. I have seen it as low as $1,000 a month and as high as $35,000 a month. So it's super important that you actually get the details. They will often say that their own occupation or specialty specific. However, when you read the document, it may be what's called own occupation for 2 years and then it switches to any occupation, or the way that they define own occupation is what's called held to the national economy or the local labor market. It's not specific to what one employee does at one employer site. It allows them to cast a really wide net that says this is what you would, could, should be able to do based on your training, education, and skill set. That definition's not great. We don't want to be compared to our colleagues. We want to be judged against ourselves. More importantly, the way that these group policies define total disability is typically you're considered totally disabled if you can't do your job and you're not gainfully employed. And that definition's not great. I have no secrets. I used to say the old adage, I'd give my left arm to be home with my boys more. They were 4 and 6 when I got hurt. Turns out I gave my left arm to be home with my kids more. And after about 6 weeks, I was ready to kill everybody. I, again, have the utmost respect for stay-at-home parents. I am not meant to be one, and most of my friends and colleagues would agree that they're not either. You don't want to have to worry about losing any or all of your benefit while you're trying to figure out what's next. And we're seeing a lot of other nuances in these group benefits. More often than not, they limit mental health and substance abuse coverage to 1 or 2 years. There's a group of illnesses that are called subjective illnesses that have a 2-year limit. Think of things that may not have a pathognomonic test. So headaches, pain, fatigue, ringing in your ears, where we know that you experience these symptoms, but you may not have a positive finding on an exam. And so those are increasing in number. And most disturbing, in the last, I'd say 2 or 3 years, we've started seeing limitations for musculoskeletal diseases. That's the number one reason that physicians leave practice. And if they're going to limit that to 2 years, you're really going to find yourself underinsured. So that is why private policies are so important. And we're going to focus on that for the remainder of the evening. So what makes a private policy so important? Well, you'll see that I put specialty specific instead of own occupation, and that's because there are a lot of terms that are used. Now, the top 5 all mean the same thing. The bottom one is a little bit different, and unfortunately, what I had on my policy. What these phrases do is change the definition of total disability to you are considered totally disabled if you cannot do your job, regardless if you're gainfully employed in another occupation. So you get to decide what's next, not them. Unfortunately, my policy had a transitional occupation definition. It adds a phrase at the end of the statement until you earn your pre-disability earnings. Well, some of you might be thinking, wait a second, you said disability insurance is income replacement protection, so why is that a problem? Well, I guarantee that everybody watching this is not at their earning ceiling, right? And what ends up happening is it doesn't take into account your future potential earnings. It's been 11 and a half years for me. I have to send the carrier that I have my bank statements and our company's profit and loss statements every month, and then they get to decide if I get my payment or not. Now, if I could make doing insurance what I made my last year as an attending, Would I need my disability insurance? No, but it's not what I thought I bought. I was told I had an own occupation policy, kind of a lie of omission. It was own occupation by the definition of my job. So, what all of these definitions do, you're going to be what you do matters at two times in the life of a policy. At time of purchase, and honestly, it's because it creates cost, and then at time of claim. So you're sick or injured, you can't do your job anymore. They're going to look back 1 to 2 years and they're going to pull your billing and your calendar. That's going to be your occupation in that it grows up with you. And that's kind of what you want to happen because what you're doing now may not be what you're doing 10 years from now. And so it's super important that you have the right language in your policy. Single most important thing. Then we get into what's called riders, or I say like kind of the pieces of the puzzle that create the full picture. So every company has what I say is a kiddie pool full of money. So the ability to get more coverage as your income ascends without having to give additional medical information. So imagine a plastic kiddie pool, the ones we put in our yards for our toddlers. They all have one. It's just that they might get triggered differently. They may be exercised a little bit differently. So, taking a step back, part of every traditionally underwritten policy is medical underwriting. You may have to give up some bodily fluids. You absolutely have to answer a million questions a million times. They have access to your medical records, your pharmaceutical records, your motor vehicle records. It's pretty invasive. You only want to go through that one time. Moving forward, we just want to say, hey, this is how much Dr. Smith is making. This is the benefits that they receive. And then the company will tell us what you qualify for. Now, in training, a little bit different. Everybody in training qualifies for at least $5,000 a month in tax-free benefit. They don't care how much money you make. They don't care what your benefits are. They know that you're starting out. They know that you're going to make more and need more. There's a gray zone when you are close to graduating and shortly into your first attending job where everybody qualifies for between $6,500 and $7,500 a month without them looking at your income or your benefits. Outside of that timing, the game changes. How much you qualify for is predicated on internal algorithms that look at how much money do you make, what benefits do you receive, and who pays for them, because remember that affects taxation, and then they spit out a number. So it's not like someone can say to me, hey, Steph, I want $20,000 a month in benefit. I'm willing to pay for it. If the math doesn't work, the math doesn't work. But we don't want to have to go through medical underwriting again. Now, here you see a whole host of different phrases. Well, there's only 5 companies that cater to the physician marketplace and give us the language that we want. You can tell there are more than 5 here, and that's because some of the carriers have multiple product designs. Some of these get triggered every year, and they don't care if you take or don't take additional coverage. Some of them, they get triggered every 3 years, off anniversary for a few reasons, but they're also going to mandate that you accept a certain percentage of the benefit to keep it on the policy moving forward. So it's really important that you understand what's the product design, how does it work, and so that you're not losing that ability. And I'll tell you, it was the second biggest mistake I made. I did not increase my coverage as my income increased. And so when I got hurt, I was actually really underinsured. So again, you want to make sure that you understand how your product is being designed. Okay, there is something called a partial or residual benefit. This is a benefit that kicks in if you have to go part-time because of injury or illness. This isn't, I'm taking a sabbatical, I want to be home with my kids a little bit longer. This is illness or injury that your treating physician says, hey, you can do your job, but maybe you can't do a 24-hour call. Maybe you can't do 5 full days a week. If you have to cut back and you lose income, all of the carriers have a rider that will help you earn back some of your losses. So I'm going to take this opportunity. Nothing is meant to make us whole. There has to be a theoretical incentive for us to get back to work. These companies do not want physicians making more money abled, or I said the wrong thing. They don't want us to make more money disabled than abled. And so nothing is meant to make us whole. It's meant to help bridge the gap. There is something called a cost of living adjustment, or COLA. This is inflationary protection. So dollar today, dollar 10 years from now, not the same. It kicks in when you go on claim. So you are sick or injured, they're paying you. As you hit month 25, 37, etc., it's going to go up based on the language in the policy. Not surprising, there are different designs. Catastrophic benefit is actually exactly what it sounds like. In the event that something awful happens and you are left unable to perform 2 or more of your activities of daily living without assistance, or you are severely cognitively impaired and need a shadow, you would get an additional benefit. So it becomes X plus Y, X being your monthly benefit, Y being your catastrophic benefit. It's probably the most hotly debated rider. I am of the ilk, I'd rather have it and not need it than need it and not have it. However, it depends on who I'm speaking with. If somebody says, look, I'm really trying to shave cost, what's the first thing you would get rid of? It's often the first thing I would get rid of because they would already qualify for their monthly benefit if something bad happened. So again, just important that you understand kind of what the ramifications are. Mental health and substance abuse. This is an interesting pendulum that swings back and forth every few years. Most of the carriers now will offer full coverage for the life of the policy, or they'll offer a shorter duration of coverage just for mental health and substance abuse, but they'll often give us a discount, and that's not the case across the entire board. And so it's really the first thing that people have to answer for themselves is how important is that coverage. I will admit anecdotally, probably have more folks that opt for a shorter benefit with the discount. But again, there's really no right or wrong. It's what's going to make you comfortable at the end of the day. I will caveat this. If you are emergency medicine, anesthesia, or pain from whatever pathway, the carriers will only cover you for a 2-year benefit because you guys are in the middle of the Venn diagram that is mental health and substance abuse. And there's one company that'll do 2 years per episode instead of a 2-year aggregate. But unfortunately, right now, that's the best that anyone can do for those occupations. Okay, I've given you a lot of information in a half an hour, and it's somewhat facts in a vacuum. So what I like to do is kind of give 3 quick stories where I can put numbers and it makes a little bit more sense. So we're going to assume that all 3 physicians make the same amount, have the same bonus, and have the same group benefit. So as you can see here, $250,000 with a $25,000 bonus and a group benefit that is 60% of their base salary to a maximum of $6,500 a month. Physician A is often attendings that I speak with who think that 60% of their entire income is covered. Now, it's interesting because in this case, the bonus didn't really make up a lot of their income. I will tell you, my bonus was a third of my income, and I never even got asked about it. And so remember, I said I was really underinsured when I got hurt. So physician A has an assumption that they're going to bring home $165,000. So how did we get that number? It's 60% of 275, right? Well, the doc didn't realize also that it maxed out at $6,500 a month. So that's 78,000. And it's going to be taxed. Now I took some liberty with tax brackets. What do you think this doctor thinks when I have to say, look, I'm sorry, but what you think you're getting is nowhere near what you're getting? Physician A, usually not too thrilled. Physician B is kind of where I was, but not quite. This doc had some of it right. Thought, though, that 60% of their income was covered. So, again, had that assumption that the bonus was covered. They did get a resident package when they were in training. However, they didn't increase it with the increase in their income. And so, again, you can see here the same assumption of the 165 and 60. So 60 is 5,000 times 12. So they thought they were bringing in 225. Again, going back to physician A, right? The group benefit's going to max out at 78,000 and it's going to get taxed. But the 5,000 a month is not going to get taxed. And so physician B is in a much better place than physician A, but still not in a great spot. Physician C is really who I want everyone to be. This is a physician who understood what their group benefit was, understood taxation, kept pace with their income, meaning as their income grew, they elected to have more disability insurance coverage. And you can see here that physician C is in a really good spot. I mean, when you think that the 275 is going to get taxed against this 191, it's not that far off. And so that's why it's so important. And there's also an assumption here that whatever the physician is going to get both, but you do have to meet the definition of both policies. So they are mutually exclusive. You can qualify for both, you can qualify for neither, or you can qualify for one, but not the other, which is what happened to me. Okay, hopefully that made more sense. One of the things that I always like to talk about when I'm speaking with residents and fellows are actually some of the roadblocks that we've run into in the last several years with getting residents and fellows covered. So some bad behavior, some interesting medical stuff, and so I want to spend a little bit of time going through those. I am kind of amazed on a regular basis how many people are writing for their own prescriptions or having their friends write their prescriptions. Now, I get it. You don't have time to eat. You don't have time to go to the bathroom. Who has time to go see a doctor? I do think things are a lot different now than they were 20, 25 years ago. This is one of the few things that will actually get you declined. Now, I'm not talking, I'm on call, I have a UTI, please call me in Bactrim and Peridium. That's a one-off. They're looking at kind of red flag medications, antidepressants, anxiolytics, sleep agents, narcotics, weight loss drugs, ADHD meds, high dose steroids, infertility drugs. They view that behavior as unethical. You're trying to hide something. You're not getting proper care and follow up. So your risk of having something bad happen is wildly increased, according to them. If you're currently doing this, please stop. You have to have a paper trail for any medication that you're taking. If a friend asks you, to write them a script. Seriously, the first question you should ask them is if they have a disability policy. Because if they don't, you're doing them a disservice by writing them that prescription. If they have a policy, I probably shouldn't say it, but do whatever you want. Once you have a policy in place and you're paying for it, it's what's called automatically renewable and non-cancelable. That means you've gone through underwriting, they've made you an offer, you're paying your premium. The carrier cannot change or cancel the policy. So please, good behavior. Now I'm going to focus on the women for just a little bit. I am an OBGYN. Women's health is near and dear to my heart. We know that as women put off family planning for education and employment, that we increase our risk of miscarriage and the need for ART. Before the first time you try to get pregnant, you need to get your disability policy in place. If you've had a miscarriage in the 12 months leading up to an application, they will not cover future pregnancies. If the word infertility shows up in your medical records, they may not cover infertility or future pregnancies. Right now, I'm working on trying to get them to at least say that they would cover spontaneous pregnancies, in that I can't even count how many times somebody needed help on their first pregnancy and then kind of had a whoops. We don't really understand it, but once the uterus gets primed, sometimes it just gets primed. If you've been pregnant and you've had gestational diabetes or cholestasis of pregnancy or hypertension or preeclampsia, if anything, quote, abnormal happened in your previous pregnancy, they're not going to cover future pregnancies. When I started doing this, any woman that had a C-section for any reason, they wouldn't cover future pregnancies. I went a little nuts. I have decent hips. I don't have a birthing pelvis. I make breech kids. I started sending ACOG bulletins and white papers and asking the carriers to tell me 5 hospitals where I could have gone in and had a vaginal delivery. Well, I can't. It's standard of care now, if you have a breech baby, to have a section. At one point, I'll toot my own horn, I had all of the carriers changing the way that they wrote the exclusion language to say that they wouldn't cover future complications of future C-sections. One company has swung back and they just flat out won't cover future pregnancies. And so if I talk to somebody who's had a section, I may not recommend that carrier. Screening tests. So pap smears. Makes no sense. If you've had an abnormal pap smear, they want 2 negatives before they'll cover your cervix again. There is one company that won't cover your cervix or uterus if you've had an abnormal pap. I cannot make this up. I asked why, and the response I got was because they're connected. I, I mean, I didn't even know what to say. I basically said, clearly, a woman didn't make this rule. And so, again, it will change who I would recommend. It is not a one size fits all. Genetic screening. So now this applies to everyone. It seems that medicine is really going in this direction, and there's soon going to be a genetic screen for everything. Disability insurance, life insurance, private commodities. It's not like health insurance. Carriers absolutely can and will use that finding against you. If you know that you have a strong family history of something, before it gets written in your notes that genetic screening is recommended, please make sure that you have your coverage in place. Now, BMI, kind of interesting. It's one of the few things that adds cost. So it's called a rating, and the carriers break it up into quartiles. Now, we know that the current BMI chart is largely based on Eastern European Caucasian men. and many of us in medicine do not identify as such. You can be too big or too small. On the small side, we actually can get the rating removed if we can prove that BMI has been consistent over time. So think of populations that are just constitutionally smaller than Eastern European Caucasian men. And so, again, you want to make sure that if you fit into one of those categories of being constitutionally small, that you have someone looking out for you on that piece of the policy. All right, EMR was supposed to be the end all be all. Listen, I read way more medical records now than I ever did, and I do appreciate that I can read them. However, you have to realize that if something gets checked, it stays checked until somebody unchecks it. And what we're seeing is what I call EMR sweep. If no one unchecks it, it just keeps moving. And one of the worst cases that we had a young lady who's been seeing the same PCP since high school or college, and at some point in college commented that she was smoking pot almost daily. It never got changed. So this 31-year-old resident who was very healthy and hasn't smoked since college actually got declined, and we weren't expecting it. And I said, hey, go get your medical records. There's got to be something there that we're missing. Well, that's what we were missing. It looked like she'd been smoking for a decade. And we had quite the time getting her medical records addended. She had to succumb to random urine drug screens, and it took us about 6 months to be able to get everything ironed out. I took my own advice and looked over MA's shoulders when I was at appointments last year. And when I went in for my annual, I was looking over her shoulder. It said I had a hysterectomy. Well, y'all, I have my uterus. I make polyps. I've had a couple hysteroscopies. If I hadn't noticed that and that went for underwriting, it would have been an issue. And so please take my advice. Any physician that you go to in the next year, look over someone's shoulder and make sure that your past medical history, your past surgical history, your medication list, your social history, active problem list, that everything is accurate and up to date, because it creates a world of problems. All right. I know many people, it comes down to cost, and I get it. When I was a resident, I pretty much lived paycheck to paycheck. And if I knew about this, I would have made some adjusting. And so there are many factors that go into cost. One is age. The older you are, the more expensive it is. Women, I'm sorry, we pay about twice as much as men do. A lot of it has to do with the fact that we make babies and that we have increased risk for autoimmune diseases, and that actuarially speaking, across all fields, women have left the workforce more than men because of injury or illness. Men, life insurance is more expensive, and that's because men tend to die younger and more successfully at their own hands. So do yourselves favors. Don't compare notes if you are of different gender. It will make the women really unhappy. State. There are state differences. There are some states that are much more expensive than others. California, Texas, New York, Florida, Vermont, New Jersey, they tend to be on the more expensive side. And so you also want to give thought to where you are now and where you may want to go. And sometimes that'll affect timing. Job. So what are you? What do you do? We all get pigeoned into what's called an occupational class, which is the carrier's internal dialogue of what our risk is to go out on claim. Shouldn't be a surprise that, say, a psychiatrist costs less to insure than a neurosurgeon. And so As I mentioned before, at time of purchase, it really creates the cost. At time of claim, they will look back and see how you've been practicing and how you've been making money leading up to an actual claim. The biggest reason that we stress getting these in place before you're finished training has to do with discounts that are available while you're in training, that if you lock them in, they stay on the policy. If you wait until you're finished, you lose that opportunity, and it is a big savings. And so I always tell folks, don't wait. There's no time like the present. We want to get you in while you're young, while you're healthy, and while there are discounts. And so, with that, I will stop sharing and open up for questions.
Perfect. It looks like we don't have any questions. We can wait a few minutes if you'd like.
And anybody that has questions can also reach out to me at stephanie@pearsonrabbits.com. Hopefully, you guys will make that available.
Yes, absolutely.
Awesome. Maureen, thank you for having me, and hopefully, we'll do this again later.
Absolutely. Thanks so much. I'll go ahead and make sure that the recording is sent to everyone through your emails this week, and we'll also have it on our website by the end of the week. Thanks, Dr. Pearson.
See ya.